What's up, guys? Welcome to the free webinar for hitting 750 members in the free chat. We're going to go over a lot of concepts on how I trade. We're going to go over technical analysis and psychology. And if you guys have any questions at any moment, just leave it in the chat, then I'll get to it. So I want to start off with some psychology. And I hope you guys have a notebook or something to make sure that you take this down, right? So as we know, trading is by no means an easy game. And it's not because the technicals, like I've seen people with amazing technicals and just really shit like mindset, like psychology, and then that leads them to take really bad trades. That's why if you guys notice, every time or most of the time when traders backtest, they'll go like 20 for 20 or 10 for 12. Like, you know, they have an insane win rate. And it's because when you're backtesting, you're able to go through like 7 hours of content just in seconds, you know? So being able to do that really gives you like an advantage, essentially. Or not an advantage, it gives you like an unrealistic sense of patience, because, you know, as you can see, I can just go through here, and instead of like actually having to wait lifetime on a 4-hour candle and see what's going on and wait to get my perfect entry, I could just go like this and I skip right through it. And just by that, you know, I've now just seen if my trade won or lost, and I have no emotions attached to it, because obviously it's if I'm backtesting, I can't take it live, so I can't win or lose money. So if I win, I'm like, oh, I'm a good trader, and if I lose, I'm like, oh, I don't care, on to the next one. But what a lot of people don't understand is this is how you have to approach a lifetime market. So like when you're trading live, you can't attach anything to money, to percent. You can't look at anything. Like some people say, oh, don't think about money, think about the percentage your account is up. No, think about the trade. Like just look at the trade as if it's a demo, and you'll notice that once you can detach yourself and not care, like you can close your screen, go to bed, wake up, and if you hit TP or if you hit SL, you won. That's all that matters. That's when, and you'll notice, like when you're able to do that, you'll be more successful as a trader. Because think of it like this, like we're all looking at the same chart, right? So we're all just looking at the same sort of nonsense here. Like none of this is a guarantee. Like me looking at this doesn't tell me, oh, okay, the market's gonna go here and go here and go here and 100% guarantee. We will never have that. We will never have that certainty. But we have this mental edge that allows us to predict to the best of our abilities what's going to happen based off of patterns that happen within the market, you know, and the same pattern can occur, but that doesn't mean that the same outcome is going to happen. So sometimes you can have every single confluence, everything that's right in your trade, and you know, you believe that this trade's going to go TP, and now you want to double up your risk and blah blah, and all of a sudden your trade loses. You know, it's called like marrying the trade. And I've been victim to that. Like for example, last week, right? Perfect example. I was in a GU sell. I called it for the free chat, and it's going great. And I caught my scale in. The scale in is going great. And then I just got another opportunity for a third scale in. And I didn't take the third scale in, but I was still holding my 2 positions. And I was like, oh yeah, it's gonna melt towards TP. Then boom, all of a sudden Boris Johnson resigns, and the trade just completely reverses. There are things that are out of our hands that affect the market in that sense. But what I want you guys to understand, and this is the really important part, is every trade, win or loss, no matter what you did, no matter what happened, no matter why you opened it, is your fault. Every loss you take, I don't care if you took someone's signal, I don't care if there's news, you didn't lose because the news, because you could have avoided the loss by not trading the news, but it was in your hands to open the trade during this time, to take it during news, to take that risk. So every trade is a risk. Entering the position, you're willing to lose. So you should never be upset about losing a trade. The second you hit buy or sell on your MetaTrader, it means you don't care if this trade wins or loses. You're willing to lose it, because all the time we want to think of the profit. So like, for example, let's say you have a trade, you're about to risk $100. It's going to be 1 to 5. You'd make 500. And you're like, oh, I can make 500, or I can make 1,500 if I risk 300. And the second you start thinking like that, I promise you, you're going to lose 8 out of 10 trades, and you're just going to get destroyed, and then you're going to blow your account. And I know we're all victim of that. Like, I don't think there's anybody here who could say they never blew an account. Like, I've blown countless accounts. Like, it's actually ridiculous. All right. So now transitioning into our 3 types of traders, right? So we have swing traders, and swing traders like to hold their positions for about, like they'd like to hold a position and swing it from like bottom to the top of a trend, hold it for a week, possibly even longer. They trade mainly on higher time frames, daily, 4 hour, 1 hour, maybe not even the 1 hour, maybe like sometimes even 8 hour. So that's a swing trader. A swing trader is someone who likes to take a position, for example, from here on down. They want to catch that sell if they can. It's often paired with like a really big stop loss and pretty big take profits. Risk to reward is usually decent. And then you have intraday traders who are usually like, they use a higher time frame basis, but at the end of the day, they're rocking like a 1 hour setup, and it'll be something more like that. Decent stop loss size, pretty good take profit, good risk to reward. And you have scalpers who are usually really small stop losses. It's a really aggressive trading style. And yeah, so you have scalpers who are really small stop losses. They like to be in and out of the market, and you're not really looking to take a move the whole way. It's really just, you want to catch point A to point B, not point A to point Z. So like a scalper, like I like to scalp a lot. So like if I'm scalping and I'm on the minute 5, right, I'm not going to try to swing this all the way back up. If I enter right here, I'm not going to try to swing this to like a 4 hour high, but maybe I'm going to swing it to like a 5-minute rejection order block, which right there, which offers me a great risk to reward. And obviously that's just a very quick example on it. But what you need to identify is how your personality is. If you're more, just think of it as, I don't know if you guys have ever played sports or just done anything, like anything career-wise in your life. Just think of, your behavior in it, or growing up, how you were. If you were more aggressive and more impulsive and you want to be quick and in and out and whatever, and you're impatient, then I'd probably recommend scalping. And if you're more of like, you can sit back and relax, but you want to keep checking, you have some sort of patience, then that's intraday. And if you really have just a great sort of patience, you're in it for the long run, you're in it for the long game, all this stuff, then, feel free to be a swing trader. There is no right or wrong answer, and there is no one that is better than the other. But it's just the fact that they're all essentially based on who you are. So you need to identify what type of person you are and find your strategy based off that. And you can have multiple strategies. Like me personally, I never swing, or I rarely ever swing, I'll say, but I do scalp most of the time, and I also intraday. So I use both. Like, I have more to my vault. So let's get into some technicals, right? So what I want you guys to understand is everything I trade is based off of an order block. And so order blocks setups look something like this, right? So for example, this would be a buy side order block. So we'd be in a downtrend, right? So we'd have this high, this low, lower high, lower low, and then we'd have a break of structure. So the break of structure is, now that we're in a downtrend, we're shifting to an uptrend. Now this break of structure causes us to have an area within here that will become our order block. So keep in mind here, we have a high, a low, lower high, and lower low. Right, and then now we have a higher high. So this higher high essentially breaks our structure. And what do I mean by break a structure? A lot of people don't understand. Break a structure is essentially, we're in a downtrend and now we're shifting towards the uptrend. So our structure was a downtrend. and it was broken because we've created a higher high. So now we're shifting to an uptrend potentially, right? So this causes us to have this area down here. And within this area, we can find an order block. And so an order block is nothing more than the lowest candle. And it's supposed to look something like this. All right, so we're just going to make this purple. I'm going to put a wick on top. And a wick on the bottom. And it doesn't have to be exactly like this, but the more it looks like this, the better. A nice body and pretty much equal wicks on both sides. So you want to find this candle resting within the lowest area of this. And this is one important key that I want you guys to write down, which is
questions in chat.
Yeah. Oh, breaking structure, change of character. No, so this would be a breaking structure. It's breaking structures and change of character would be like change of character. Like I don't really use that phrase. It's kind of based off like who you learn from. So I use breaking structure and continuation of structure. Change of character would be like, yeah, like you're doing both sides and you double up, but I focus on breaking structure and continuation of structure. That's just like psychologically how I name them. So this is a really important part of it, guys, which is for bullish order blocks, you want to make sure that you're using bearish order block candlesticks. So like on this one, the lowest candle that I'm going to use as my order block has to be a bearish candle. And then if it were a bearish order block, then I would use a bullish candle. So at this point, we have this, right? So we have this setup. Ideally, market should come down here and continue our structure. And once we continue our structure, now we've created a supply or demand zone resting at the bottom here, which we can now form a scaling off of. So you can see here. Now we have this supply or demand zone, and essentially all this is, it's the same exact concept as an order block, except order blocks are considered order blocks because we've just broken structure. So now if you have one that you've continued instead of breaking structure, now you've continued, that's considered a supply or demand zone. And then the same thing will happen, and you'll see these setups occur often and often again. Like big picture, these setups essentially always happen. Like I can always really pinpoint one of these out, And so it's essentially the same thing on the lower side. And it's the same exact thing for a sell side order block. So anyone have any questions on that, or drop a number one if you're good, please. Just so I know if I should spend more time or if we move on. For sure, for sure. So guys, like just to reiterate, this is literally the only setup that I look for. Honestly, I always look for an order block or a supply or demand zone. I don't trade. There's people who trade, it's called like mitigation blocks and rejection blocks and stuff like that. I don't trade any of those. I personally only use like classic order block setup. I find that it works the best. And what I really like to do is check the 1 hour and scale down all the way to my 5 minute and refine it to there. And, I do this on multiple pairs. Like I even do this on crypto now. Where is it? I've been doing it on crypto. No, this isn't it. Trying to find out which Bitcoin I'm using. Yeah, like for example, see here on the minute 5. No, it's not this chart either. Damn, my bad. Here we go. Here on the minute 5, I have this sell right here. We essentially tapped into this 1 hour order block, broke structure right there, and it was literally as simple as that. And yeah, this works with Nas and SPI, and I know Wolf trades Nas like a freaking monster, and I know he uses this, and I know like my old mentor Hot trades like a freaking monster, and he literally only trades futures, so this stuff works, but really quickly, I want to get into breaker structure versus continuation of structure. Hold on, guys. Give me a second. All right, so we're back. Next, we're going to cover supply and demand zones again and how to choose the right ones. So we just looked over this, right? And for a lot of people who don't understand how to choose the right supply and demand zone, essentially what you need is a confirmation. So you're going to find supply and demand zones on every single time frame. They're going to be apparent everywhere, right? So what you need to focus on is which time frame you're looking at, and then find so there's two pictures, right? There's macro and micro, and macro is the big picture of the market, which direction we're moving on a higher time frame, and micro is the way we're temporarily moving. So sometimes, like for me, the way I look at it is, okay, we're short-term this, but we're long-term this. Like we're short-term bearish, but we're long-term bullish. So current time, I can look for a sell position if we're short-term bearish, but I need to keep in mind that overall I'm looking for a buy, stuff like that. So for example, if I have a 1 hour setup, right? Let's just copy this. Put it. Okay, there we go. Let's put this down here. So sometimes we have a setup like this form, right? Or in something like this. And you'll notice market does this, right? It comes here and it moves down, and then it moves up, and then it comes down to here, right? And that's something where we avoid it. So what we're trying to see is like, all right, we have continuation of structure here and continuation of structure here. So now we think like, all right, there's going to be a new demand zone over here. But what we don't understand in this concept is we need to have an extra confirmation. When you have a setup like this, you need an extra confirmation within the zone to tell you that, yes, we are going to move bullish, or we're going to move, that we're going to move off this zone. So the only way I'm taking this zone here, or I actually wouldn't even take the zone, but the only way I'm not taking this zone here is if we do this. And now we formed a new zone. And now that tells me that market doesn't want to latch on all the way down here. But besides that, the way I have my order block set is like literally like this. I'm gonna show you guys like, dang, I don't know why everything's so duplicated. All right, here we go. So let's say we had this breaker structure. I'm instantly setting my order block, my limits over here. All right. The second we continue structure, I'm setting my limits down here. Okay. We pull back, continue. I'm setting my limits on this new zone. Now, if we pull back, miss my limit and continue, I'm still leaving my limits on this zone. The only way I'm moving away from that idea is if we come down to here and push higher. Because now I understand that we've latched onto this zone, showing me that we don't need to come onto here. So I use that phrase latched on. And that's essentially like, what is the market playing off of? I tell myself, I'm like, all right, let's make this make sense. So I look at the market. What are we playing off of currently? Like, okay, we have this order block and it moves from here to here. Okay, so now I have this demand zone. It's moving from here to here. So I need to find something that makes sense. I need to look at what's making sense and play it off of there. So now if I have this setup occur where we skip kind of this demand zone over here, but we play off it and continue, now I'm setting my limits for this zone. Does that make sense, or does anyone have any questions? It looks like Julia doesn't answer your question. And guys, feel free to unmute if you need, if you want to ask questions, or anything. You can also just type it in the chat if you don't want to talk. But yeah, if you guys understand the concepts, like, I'd appreciate it if you just put a 1, so that way, like, I know to just keep going. I don't always do this in the 1 hour. Like, a lot of times I follow up just on the minute 5. But it's so picking your time frame is essentially just based off of what type of trader you are. So like if you're an intraday, like find the time frames that work for you and make this work on there. If you're a scalper, find the time frames that work for you, make it work on there. You know, only thing I recommend though, let's see, hey, Ali, those 2 higher bottoms. So these 2 wouldn't work as liquidity most of the time. Hold on. Okay. All right. Let me answer these one by one. All right. So somebody asked, do I always look for breaks instruction continuation on the 1 hour? I look for just like the highest points. So like, yeah, essentially, I mean, it's easier to just look at like where structure is being broken on the 1 hour, and it's the higher the time frame, the more confirmation kind of like it shows you more macro picture. So it's always nicer to have that. So I always want to look at like where we are macro and micro, and it's best if you can make them both align and take trades that way. Okay, and somebody said these 2 higher bottoms mitigated wouldn't work as liquidity. So essentially, yeah, I mean, I guess if we do flip bearish, right? So like, let's say we went like this and we flip bearish and this was just like a proper sell order block. Yeah, you could probably target that as liquidity. Mark asked, which time frame do I scalp the most off? Oh shit, dude, did I not? Oh, okay, I did resume. He asked, which time frame do I scalp the most off of? I scalp most off the minute 5. Do you tap in on multiple demand and supply zones? What do you mean? Like, do I scale into the same trade? Is that what you mean, Patrick? Or also, everyone, just for being in here, is gonna get like a free week of VIP signals, just because you guys took the effort to show me that you want to learn. So I feel like it's always nice to reward, you know, those who take the effort and stuff. Does momentum ever come in? Yeah, I mean, here's the thing about like, yeah, momentum can play a factor. And it's like, if it's momentum driven by news, sometimes I won't take the trade, but most of the time I just like, to me, the way I see it is like, all right, this fits my criteria for a trade, right? To me, it's like, all right, this setup right here fits my criteria for a trade. So I'm going to take this setup because it fits my criteria. If it wins or loses, whatever, it doesn't matter, because at the end of the day, I took it based off the reasoning that it fits my criteria of a trade. So there's 35 people in the Zoom. I'm gonna pause the recording real quick.
Recording in progress.
So let's get back into this. Do I close a trade when news is inbound? Yeah, honestly, I mean, I don't really like to hold during news. Like I feel like you kind of can't predict it. Or like I feel like I can't predict it. I don't really trade fundamentals like that. So I'd rather stay out during news. Um, you know. So another way that I focus on staying away from like getting faked out is I have this drill that I use for real highs and real lows. And so essentially when I'm looking in the market, right? Let me try to move this stuff down really quickly. For example, let me show you guys this example on Bitcoin because like I literally just marked it up. So over here, right? First of all, here we are on Bitcoin. Okay, and so this real highs, real lows drill I use essentially allows me to see the market in a better fashion because as we all understand the market, it's supposed to move like this, right? Uptrend, consolidation, and then downtrend, right? Right, everybody understands that. It's like first thing we're ever taught. But then you hop on a chart and you realize the market really looks like this. And then it'll like come all the way up here and then come all the way back down and then it'll go. So what I use this drill for is essentially to avoid all of this noise in the middle and be able to see the market for its real highs and its real lows. And this, I kid you not, is like a lifesaver. So essentially what it is when market, like for example, we pushed up to here, right? So this would be my real high over here. Let's put this in replay mode just so you guys can see. And over here would be my real low. This is the lowest point where market was at. Okay. And now everything that happens in between, I don't care about. So now that we've broken structure towards the downside here, my new high would go right here because this is the highest point that we pulled back to. And now I'm waiting for a pullback candle over here to move my new low. Okay, so now that would be my new low. So this is my new high and this is my new low. And now I'm looking for the zone, the highest area that we're going to pull back to before we break either side. So I can see we pulled back to here. This would become my new high and this would become my new low. So I'm not simply just using this like as magic, but I'm using this in confluence with like my other confirmations to help me essentially like find the right trade. Right, so it's like you can use this to help you find a real order block. So for example, over here, what I noticed was so we broke structure towards the downside here, right? As you guys can see that. And now we had this order block. Okay, and market comes onto it. And we wait for a continuation. Let me show you guys this on the minute 5. So on the minute 5, this is how I caught this trade. Essentially, we had this order block, price break structure, comes back into it, and then it breaks structure over here, comes back into it, comes back into the zone, and then breaks structure, it taps in, keeps going. And when you guys look at how this ends up playing out, see right here, we have this zone over here because market broke structure right there. So we had the zone marked up and you can see this area plays out super nicely. Like this thing melted straight down off of it. And yeah, there's like, I mean, there's a couple losses and stuff as well. But when you catch like a 1 to 32 on a Bitcoin trade, you're able to afford 1 to 2. You can afford 10 losses. You're still up 20%, And along this trade, like it still offered a lot of scalings, but just to show like this is how I refine my trades down is I use real highs and real lows to find my real order blocks. So that way I can look at what the market wants to latch onto. So like to me, when I'm trading, I have the philosophy that there's banks that are trading, like they're inputting their money into the market, and there's an algorithm that's going to move the market price around. So to me, it's like I just try to find zones that the algorithm has to fill into. Like I don't trade support and resistance. Like to me, that just doesn't work. I know some people make it work, but to me, it's like, no, I'll call it fake for the most, like, I'll just say it's support and resistance fake just because I disregard it. So like, why validate it myself? Oh, and you can see like over here, the way I trade is like order blocks. And a lot of stuff is just like the way you're mentally looking at it, but essentially it's like the same thing. So you can even see here, I always have like watch this, right? So over here on the minute, look, so here we had an hour one break structure down, and market pulls up into the order block and it starts to go down. But big picture, we're looking bullish. So this is like a short-term bearish order, and you can see how heavy market reacts off of it. But big picture, I was still looking bullish. So like I still have this trade in that I'm holding. It's like the first trade that I swung in a while. So I actually held this one over the weekend. I'm gonna see how it opens during the market, but I'm not looking to hold it any longer. I just want to kind of get out of this. And it's all coupled with like real highs and real lows in order to allow me to see the right things. So like, does anyone have any questions on that? Or drop a one if you get.
Hey, Ali, do you mind to go back to Bitcoin?
Yeah, sure. What's up?
So the trade that you just saw.
This one, yeah. Yeah.
Yeah, that one. So the order block that you just put the order on, that one is below the greenbacks that you mark as higher high. So that's what I don't understand.
Yeah. Okay. So this one, what you like? Look at this, right? Oh, my bad. It's because I didn't update the real highs and real lows. So you can see here. Watch. We have this. So it's a real high and a real. Let me go in replay mode for you. My bad. So you can see here. Right. There's where the pullback goes, and then price pushes higher. So I'm going to wait for a pullback candle right there and right there. Right. Price pushes higher. Gonna wait on a pullback candle. And we had pulled back to this zone. We had a break of structure right there. Price starts pushing down. Comes back up. You can see, so we had this break of structure here. Right. Move this out the way.
Yeah, because what I would have done is since you have that break of structure right there, I would have used that order block right there. Yeah.
Right.
The rest.
So the reason why I didn't like this one was just simply I didn't like the candle. And that's why I waited for extra confirmation for this structure to get broken.
Okay.
And then that's why. So now I was able to play it off of this order block. Like if you see that. Because now we broke that structure. Does that make sense?
Yeah. Now I got it.
So I really didn't like how this candle was. So I waited for extra confirmation. And the reason why, like, guys, if you're not 100% confident in your setup, like just wait for an extra confirmation. I can show you, I promise you, I can show you like 20 examples within the next 10 minutes where you get a trade, a good trade. You don't take the first entry, but there's a scaling. You don't take the first scaling and there's a second scaling. So there is always opportunities. Like, do not ever feel rushed to enter a trade, especially like, I mean, we're all in here to learn smart money concepts, like the way I teach it. And dude, like, I promise every single one of you, there are so many fucking setups that occur using this strategy. I mean, you can trade this strategy on every single fucking pair. Like, You can see I usually don't trade on crypto, but I've been really heavily backtesting it on crypto and I like it. I know people who trade this on US30 and NAS and SPX and gold. And, I've traded it on those too. Like, I've traded it on like literally every single currency pair. The only reason why I mainly trade GU and EU now is because those have become my most profitable, but I found success with it on every single pair.
Hey Ali,
Yeah, what's up?
so bro, can you break down GJ? I'm seeing a for buys, so correct me if I'm wrong. It has made a bulls big structure.
Let's see. Okay,
And-
honestly. Oh yeah, what were you saying?
Yeah, just let me see how you break it down.
All right, so
I mean,
like right
you
now
start-
I'm looking big picture right here, right? So you can see we have a breaker structure on this zone, right? And then we have this hour 4 order block. Looks like maybe, kind of played off. I'm not like too reliant on the hour 4s, and then you could say we have like continuation right here. Template, continuation of structure. I'm not sure if that created equal lows or went lower. A low of this candle is 828. Low of this one is 016. Oh yeah, this one. Yeah, this one is definitely lower. Looks like we held on to that, right? And then continued even higher. And it looks like we also have this area where we might be rejecting off of. So definitely what I'd be looking for is I'd go on a lower time frame and identify which way this market's going to break structure towards and look for confirmations within the zones. So like, for example, right now we kind of have this break of structure on the hour towards the downside. So I'd maybe try to refine it, find out which order block. Maybe there's an order block resting within here, right? And I'd wait for market to come up to here like this. And then I'd wait for a break of structure and take that order block down to like a potential buying area and then look for that same thing over here, which would be, something like this.
I got it. So
I mean,
like by what you see right now, you will go for a. I mean, you go for a counter trend.
I'd go for what the market gives me. So it's like, I'm not saying like we're guaranteed, but I'm saying we could potentially see a sell setup occur off of here. Like, so we have this hour 4 order block that pushed us lower, right? So like we came up here, latched onto this and pushed lower. So you could say potentially that this is going to keep moving down if we get the right confirmations within that zone. And think of it like this, bro. You don't need to swing. You don't need to take this trade. Yeah, I just click the same one time. You don't need to take this trade from here to here. Like dude, a lot of my trades, I catch like a freaking 4 pip stop loss. And I'm able to just take like this quick move, and it offers like really high risk to reward. And so that way, at least when I'm counter trend, I'm not in too long. And I'm able to catch like still really, really good risk to reward.
Amazing.
And another thing I want you guys to notice is like the aggression that comes off of order blocks. So it's like this zone over here, like look how heavily we melted down. This doesn't happen for a reason. So it's like, think of all these candles as money. The more the candle moves in a direction, the more money that's being pumped in this direction. So this is like a very heavy key like indicator. Like it's like an indicator with your eyes, right? So identify which zones is the money being pumped from. All right. So like, for example, if you have an order block and price is just literally resting in there, like it's sitting, it's not moving. Yeah, it could still work, but it's probably not the best setup. Like, for example, this one, you can see right here how heavily we push price down. Like, look how small these bullish candles are and look how big these bears are. Like it took 1, 2, 3, 4, 5, 6, 7, 8, 9. Like it took like 10 candles to push up and essentially 3 candles towards the downside to counteract all of those. Right? Do you guys understand that? Sure. Let's see. All right. Thank you, Mark. I appreciate that. And I'm gonna upload Zoom, by the way, for everyone later on, so you guys can go back and study this. Let's see. Guys, one thing that I want to explain really quickly, I don't know how well I'll be able to show it like on a replay mode. Because I need to find like an example that fails. Give me one sec. All right, let's just say, for example, we're in this trade, right? And I think I need to go down like minute 1 on this shit. No, this doesn't even work. Here's an example. And I'm not trying to show you guys like a winning example. I'm just like trying to show a certain type of trying to show you guys like a useful tip. See, that doesn't work because that works out. Give me a sec. I need to find something that doesn't work. I don't know, it's just kind of hard to like find these. No, it doesn't work here. Hold on. All right, for example, I understand that this isn't like the best example or anything, but let's just say that, you know, we caught this fucking snipe, whatever, and we're up 1-2 right now. What you need to identify is, in order for this trade to be valid, we need to break the structure. So if we've started moving up, right? Like if we're right here and we've started moving up, and I'm up like above 1-1, whatever, you know, that's like a pretty good risk to reward. And I need to break here to confirm that my entry is going to keep going. It's pretty safe to put your stop loss to break even at this point, because if it comes back down and hits your level, then it's most likely just going to keep going down. And I wish, I don't know, I can't find like better examples right now, like, you know, of this. I don't know, it's just kind of hard to find an example of this in a back test, just like the way I'm doing it right now. But I know like when I'm trading live, I see this happen all the time. So I'm in my trade, and now you're in your trade, right? Because your trade goes something like this. You know, you have your order block set up, and this is your order block, okay, over here. And now you need to continue structure up here, right? Or realistically, this comes down like this. You know, it stair steps down. Yeah, I'm a screen record this next time. Good point, X. So, you know, it's coming down like this, right? I hope everyone is kind of getting this. And so now, like, yes, we're tapped in. And what you want to see is us break this like microstructure is what I'd call it. Like within a certain time frame, I have, so like, for example, on the minute 5, I consider just like the way I trade, I say like, okay, this would be a micro minute 5 breaker structure. And that this would be like the macro, because this is like the big picture move. So what you first want to see is the microstructure get broken. So like, let's say we come up here. Let's just say that this is our order block. Okay. And we're in this long position, you know? And so whatever, we're up pretty decent risk to reward right now. Like we come up to here. Now think of it like this. Market's been trending down, right? Like off of this order block, off of this one, whatever, right? It's just like order blocks on order blocks to make it trend down on a smaller time frame. So you need to think about it as, okay, this might just continue to trend down and break through our zone. So if we come through here, if we come up to here, it's safe to put your stop loss to break even when you're in an area that might push market back down. Because let's say you just latched onto something that's going to push market back down, you're most likely going to get stopped out and your trade will just get ran through like this. Now, it's kind of funny because if we break this structure, now I put my stop loss at the lowest point. So now it's no longer at break even. So it's like in order for me, because now I have a potential scaling, because how we talked about those supply and demand zones. So this is how like I avoid unnecessary losses in the market. It's like, you know, a lot of people will tell me like, oh, when you catch a 1-to-1 trade, like, are you moving your stop loss to break even? What are you doing? And this is what makes me move my stop loss to break even. And it's to avoid this unnecessary loss. So if I notice that the market is latching onto something that could push us back down and I'm in a buy, then I'm going to put my stop loss to break even, because essentially if we latch onto something that can push us back down and it goes back to my order block, it'll most likely run through my order block and stop me out. And the idea isn't to make as much money as we can, it's to avoid losing money. The more money you avoid losing, the more you'll make. That's like a lot of people think, oh, just like the more trades I take, the more money I'm gonna make. But no, it's really the less trades you take, the less you risk. And like the less you're putting yourself at risk, so the more you're guaranteed to keep. Even if you're like a losing trader, like you're not profitable, you'll still have a lot more money if you trade less, you know, as long as you use proper risk management, of course, but like that concept applies. And so I know we've been kind of going for a while, so I'm going to try to wrap this up really quickly. We just have like one more thing, which is going to be liquidity targets, because everybody asked me about this. So liquidity is essentially just money resting within the market, right? It's where it is. So all these wicks, for example, right here, if I'm in a buy, if I'm like in a proper buy, which we know this one isn't, but let's just say I am in a proper buy, I could be looking to take all these wicks. And so wicks can be seen as like equal highs, like trend lines, like whatever. Essentially, it's areas where money is being heavily moved from, because like that's where the banks are moving, right? So wicks, like the charts don't just magically push down and up. Like that's just money. It's money being moved around the market. You know, this comes down because there's money towards the downside coming in. This goes up because there's money towards the upside. That's how the market moves. So we have these equal highs over here, essentially, which means that there's a lot of resting money. So a lot of people would see this as, oh, we have a good resistance level right here. But in reality, what we have is a lot of liquidity here. So if I'm like a multi-billionaire, if I'm this big bank, if I'm like a really big bank in the market and I want to take a trade, am I gonna avoid taking these people's money, taking these like millions on bill, or maybe even billions, you know, however much money, which is going to be a lot because it's able to move the market down, all that money resting here? Am I going to avoid it or am I going to take it? You know, like if it were you guys, I want you to put like a 1 if you would take that money, or if you put a 2 if you'd avoid it. Like if I'm in a position to go take more billions and like take people's money versus, you know, leave it. And so it's like common sense, you're going to want to take it. So you want to take, that's why we look for order blocks like with liquidity resting below them. So like, for example, this would be a really good example. Like if it were proper market, and let me try to find like, let me get out of replay mode so I can show you guys something. Yeah, my fucking eyes hurt. All right, perfect. Look, right here. You can see break a structure towards the downside, right? Have this order block, and price comes and just melts off of it. You know, that's like without even refining it. You go on a smaller time frame, you can see like, check this out. So now we have a higher time frame zone, and this is literally like my favorite setup, right? We have a high time frame zone, and we have the zone on the hour. And then when you go down time frames, like to the minute 5, you just wait for like this microstructure now to align with it. So we have this break of structure over here. And then you have this order block resting within here, and you can see market literally like snipes that and sells off. Someone asked how old am I? I'm 19.
Holly, I haven't tried this, but they have indicators to help you find order blocks. You don't use any of those?
Nah, I think those are bogus. I'm not gonna lie.
Okay.
It's like, to me, it's like, I don't know. I've looked at them and I've honestly made fun of a lot of them. I think they're pretty bogus. Like I'll show it, like, let's do one right now, right? And see what it has. Like, let's just use the first one. You know, like this one would have been ran through. This one would have been ran through. This one would have worked. Would have worked. This one would have been ran through. I just like feel like they don't really give you much. They get stopped out a lot. Ran through. I feel like indicators are kind of like a waste. Does anyone have any questions like on this setup? So like essentially, guys, like when I'm getting on the charts, what I really want to do is I want to find like an hour one zone just like this. Like this is, I'm sure if I go back to my chat, like I'll find, I think I actually did take this trade like on my account. And it's like, guys, finding a higher time frame zone should be like your macro structure, and allowing the microstructure to fill in and move with it on a within that zone is literally like the best setup I could possibly find. This is how I smash like the highest risk to rewards. Like this is honestly what, when I'm taking prop firm challenges and stuff, this is how I trade. And I'll pass the challenges in like one trade, and I only risk 0.5%. I'll land like a 1 to 20 just because I let I let my higher time frames and my lower time frames align with each other and take the trades based off of that. And then I look for liquidity targets. So I'd probably be out the market, you know, within this area over here, because we have a lot of liquidity resting right there. And that right there is like a 1 to 8. Just a great trade. Great trade. And then it's honestly rinse and repeat. Like I can sit here all day and like show you guys, but essentially at the end of the day, like you guys aren't gonna trade the same exact way that I do, but what I want to teach is like the concepts, and I want you guys to pick and choose what works for you. And as well as we all have like our own mental edge and our previous knowledge. So it shows us like how we can piece these things together and find our own strategy and make, like, once you make a strategy your own thing, doesn't matter who you learn the pieces from, but once you make it your own, you literally become a monster in this market and you become unstoppable, because like now you have something that's yours that works. Nobody can tell you you're right or wrong. I can sit here all day and somebody can tell me my setup's invalid, but it's like, if that's my trading style, all right, let me take my loss. But you know what? I promise you, I'm gonna take a win that's gonna be your loss as well. You know, so nobody has a bulletproof strategy. That's important. Like me, bro, like I'm not gonna lie. I've been in positions where, you know, when I wasn't like that good at trading, where I took like 20, 30 losses in a row, and then I just freaking smashed like a big win, because like my strategy is based off like really high risk to reward. Like, for example, I'm up, you know, thank God, really nicely on EU right now, and like and it can keep moving. And yeah, somebody said with the smaller lot size, you can use a bigger, with a smaller SL, you can use a bigger lot size. Well, yeah, your stop loss, your lot size is essentially based off your stop loss, because it should be predefined by risk. So like if I'm risking $100, and I have a 5 pip stop loss, that's a 2 lot. If I have a 10 pip stop loss, that's a 1 lot. It's like if I'm risking $100. Mark, you can, Mark, message me privately about that question. It's not like a public thing. Actually, hold on. Yeah, somebody said every strategy has winning and losing trades. Yeah, most definitely. Like, yeah, as I said, there's no such thing as a bulletproof strategy. Like, I don't care who you are, you're gonna take a loss. And I don't settle for one-to-ones. Like, I could have such a great risk to reward, but I promise you I'd make less money because like I just don't settle for one-to-ones like on my personal account. I don't. Does anyone have any questions or anything, or are we good at this point?
Hey, Ali, can you go back to the GBP trade that you were showing?
Yeah. Wait, hold on. What the hell just happened? Okay. Yeah.
Yeah, that one.
Okay.
So the first red area that you are marking is on the hour time, is on the hour, right?
Yeah.
So once the price go back to that area is when you refine
Yeah.
on the 5 minutes, right?
Exactly. So like I wait for a minute 5 break of structure to happen, and then I try to take it off of there.
So first of all, you
And look, like you can even see, like if you refine that hour candle down to the minute 5 in the beginning, right? So this was our hour candle. Yeah, and I do that a lot. But like if you want extra confirmation, you wait for another break of structure within there. Like look over here, you know. This is our whole hour candle, the order block, but you can already refine it down to the minute 5 and you can see it gives you a sniper entry.
And it taps anyway.
Taps in and it goes. And then, like I said, like if you missed that one, if you wanted better confirmation, like this is what I was explaining earlier, like the market gives you another entry right here.
Yeah.
You know, has its break of structure right in here. You can see. Let me show you guys this.
So, and
let me just show you something really quickly. Right. So you have your real high, like I said, green. And then your real low would be down here.
Okay.
Then the market breaks above, which was going to be this. Pushes above. And now it taps you in, creates that, and then it breaks structure. And so now you have this order block over here.
And you have the second one right there.
Exactly. Okay. So just off of these 2 trades alone, you know, you could have caught, this one's a 1 to 13 and the other one's a 1 to 8. So that's 21% literally off of just like high time frame zone and refine.
And okay, so right there as well on the first area that you mark. So when the price go down to break a structure, there is another, I don't know if call it order block or something like that. No, on the previous one.
On the 1 hour?
Yeah, on the 1 hour. And the 1 hour you don't see it because all the candles are red all the way down. But on the 5 minutes.
The 5 minute.
On the 5 minutes before the break of structure, there's a lot of kind of candles over there. So
over here?
No, right below the other block.
Over here.
That area. So okay. So the price always has to go up all the way to the other block, right? It doesn't matter if it has.
Yeah. But you remember, like, it's either we see that, or you remember how I showed like when the demand zone wants to skip. We need to see.
It's what it get me confused. The difference, or I don't know if to get into the demand zone or the other block or.
So just look at where you have the most confirmations. And if you're confused, wait for an extra confirmation on a zone. So like, let's say you have this setup right here.
Yeah, sometimes when I wait for confirmation, the price already ran out.
Right, so sometimes, yeah, it'll be like this. So wait to see if you're gonna latch onto here and continue higher, or if you're gonna go down. If you latch onto here and continue higher, then I'd say that this becomes a valid zone, and I'd be willing to take it. You know, I'd put my
Yeah,
money-
that becomes the new zone. Okay.
But if I'm patient and it doesn't want to run through it, I mean, and it doesn't want to latch onto it, then you'll see it just go straight like this. And now you've avoided taking this loss, and you just took this win instead.
Yeah, but
Or, you know, obviously there's no guarantees. The market can sometimes just boom. That's normal. It's part of the game.
yeah,
Trading,
No,
you gotta know that happens.
I took few loss
Yeah.
getting into the
it's
trade
normal.
right there. So
It's something, you know, you learn, like with the losses, you learn more. So it happens, man.
okay. Thank you.
Look, someone said, my Asian range strategy, like I literally have a million YouTube videos on that. So just go check those out. Yeah, just like I said, learn to maximize your win to loss ratio. Like patience is key. You know, you got to be patient in the market, because like, think of it like that. Like, dude, the market is designed to fuck with you. Like, it's designed to throw you off. So like, as I said earlier, bro, it's like we're literally just looking at candlesticks. Like, this tells me nothing. This doesn't have a word on it saying, oh, I'm gonna go down, I'm gonna keep going down. No. So like, nothing says this has to happen, but we just look at patterns and like, you know, the way they're forming to try to believe that this is going to happen. So if you're impatient, you're literally going to convince yourself to see something that it's not. It's like, I don't know if you guys have ever heard, like if you're in a room and you can't really hear the song playing and you start to think it's a different song that's on, and you're like, and you'll start singing the lyrics in your head, you know, you're like, oh yeah, I know this song. I know it's this song. And it'll sound just like the song you're thinking. And then somebody turns up the volume and you're like, yo, that was not the song at all. Because it's easy to convince yourself that it is something that it's not. It's the same thing in the markets. Like, you're looking, you can easily convince yourself that this is gonna trade, this is gonna reverse right here. Yeah, like it's like I just said, your mind is more powerful than you realize. Like, so you can start to convince yourself, oh yeah, this is gonna do this right here, and blah blah. And then in reality, no, you were just impatient and you caused yourself to take a loss. Like, that's where the psychology really has to come in. Like, I mean, I'm still reading this book, but I really like it. It's called Trading in the Zone. Like, my buddies recommended it to me, and like, bro, this thing hits, like it slaps. Like, if you guys struggle with freaking trading psychology, you gotta buy that book. It's like $25 on Amazon. It's like, it's very worth the investment. Trading in the Zone by Mark Douglas. Like, yeah. Does anyone else have any questions? Yeah, Elias, go ahead and send it in the traders chat, please. Elias. All right, guys. Thank you for turning up. I appreciate everyone who joined. I'm gonna try to get this uploaded as soon as possible, and I hope you guys enjoyed it. You know, thank you once again.
Thank you.
If you guys didn't get your free week, make sure you message PIP and DIP support, and I'll make sure you guys get it.